Hey guys and dolls, and welcome into today's video. Today I'm going to be talking through some of the NIO earnings, the Q4 earnings that were out for fiscal year of 2020 into the beginning of this year. They did miss on their EPS, but there is some really good news because NIO did actually do over £1 billion. So this is really good news for NIO. We are going to dive straight into the computer. No BS in this video. We're going to get straight to it. If you are new, then do please hit that big red subscribe button below and be sure to like this video if you find value. Also, at the end of this video, guys, I will be doing a full breakdown of the NIO stock on the charts, so be sure to stick all the way through to watch that analysis as well. Let's dive into my computer. So guys, I'm on the NIO homepage for their deliveries, and we can see that for the fiscal year of 2020, we had vehicle sales for NIO, and that is a represent increase of 130% for the fourth quarter since 2019. So a year on, we are actually increasing by over 130%. So that is really good news for NIO, and that is also an increase of 44.7% from the third quarter of 2020. The vehicle margins were at 17.2% in the fourth quarter of 2020, compared with a negative 6% in the fourth quarter of 2019. And that was 14.5% in the third quarter of 2020. So that's really good, guys. They actually have increased by 3% in their profit margins. So that is really good news for us NIO shareholders. The total revenues were actually over £1 billion, guys. So that's absolutely amazing. And that was for the fourth quarter of this year, representing an increase from 133.2% from the fourth quarter of 2019. So this is where we can really start to see, once you put into perspective where NIO are growing in comparison to this time last year. And if you guys can imagine how this is happening right now, they do have a new facility coming out in Europe again at the end of this year in Norway. And again, we are hopefully going to have that global expansion into the US market. So you guys can see, you start to picture yourself as a long-term investor, how this number is going to continue to go up. The next quarter, NIO are projected to do over 20,000 in vehicle delivery. So again, it's just going to keep on snowballing, in my opinion. So I don't know why Wall Street like to pump this with negative news, and they do seem to just be concerned with the short-term gain of this stock. But really, you've got to have a long-term mindset as an investor if you're investing in NIO, because long-term, this company is going to grow. This stock is going to at least double, triple, if not quadruple in the next year or two. And it's so easy to see that when you look at the numbers like this. I mean, we're only just started to go through the vehicle deliveries on here, and you can really see how they are growing year on year, and it's so impressive, guys. The gross profit was actually 175 million in the fourth quarter, representing again an increase. So that's really good news. Their gross profits, there was an increase of 175 million. We also have gross margins, which was again 17.2% in the fourth quarter, compared with a negative 8.9% in the fourth quarter of 2019, and that was a 12.9% in the third quarter of 2020. We also had a loss from net operations, which was actually quite a lot, and that was 142.7 million in the fourth quarter, representing a decrease of 67%, but that's still great because again, they are decreasing that loss on their operations. So again, that means as they start to go forward and they start to ramp up their production, it's only going to get cheaper for NIO. And you guys know how bullish I am on Cathie Wood's conviction of autonomous driving, and of course that taxi network that is going to start to be built up over the coming decade. This is going to be a $79 trillion industry. So if NIO do have a slice in that market share, then we can start to see how big this company is going to go. This company is easily going to be over 100 billion by the end of the year, in my opinion. And right now they have a market cap of only about 74 billion. So that just goes to show you how much room there's left to grow, and that's just coming into the end of this year. And guys, they could easily smash this. This could be a $500 billion company equal to Tesla in the coming decade. So it's so easy to see why this company can at least 5x from the current share price, and that's why I'm so bullish on holding NIO for the long term. Cathie Wood talks about how for every doubling in vehicle capacities to deliver, you're actually going to have a decrease in that revenue by about 28% for the people that are manufacturing it. So that means if NIO are producing 10,000 vehicles, the next month, if they're producing 20,000 vehicles per month instead of 10,000, they're actually going to have a decrease of 28% in the costs associated to manufacture those products, because they are manufacturing it in such a high bulk. So this is where it's really good, again, to know as a long-term investor, as this company grows, they're going to actually increase that revenue because it's going to be cheaper for them to actually manufacture these products, these cars, these electrical vehicles, and that's going to allow the profit margins of NIO to grow. So us NIO shareholders can again gain more bang for our buck as we start to invest our money into a company like NIO. So that is again some more information for you guys. Net loss was 212 million in the fourth quarter of 2020, representing a decrease of 51% from the fourth quarter of 2019. So again, you guys can start to see, and that's an increase of 32.6% from the third quarter. So guys, this company really actually could become profitable by the end of the year. Who knows if they are going to make it, because again, they do have that global expansion into Europe, and that is going to cost them a lot of money, in my opinion. And again, you know, you think of any startup company, when you start up in a company, it's gonna take a long time to kind of ramp that up. So we just have to have patience. Again, always do your due diligence. Know why you're invested in a stock, not just like NIO, for example, but you know, you have to have the long-term mindset, as I keep saying. So basic and diluted net loss for American depository shares, which is what we all wanted to know, was actually 16 cents. So they actually did go down. I think the analysts had priced in about 9 cents loss per share. So it was actually quite higher, and that's why we did see a small sell-off in that share price. And again, I will get over into the charts in just a second and look over what I can draw up for you technically, so we can price in some new entries to buy the dip, and then we can continue our momentum forward throughout 2021. And I think this is all down to many different factors. Again, it's really useful to know that the month of February is going to actually see a lower number of deliveries, because again, in China on February you do also have that Chinese New Year, and that is going to slow down the ramp of production. And then again, you've got a lot of people taking holidays around this as well, and we are still in the midst of a pandemic, so there are other things there that will tighten up those losses. And that's why in February we are never going to see a full vehicle production of say 7,000-8,000 like we have done in the month of January and December. But moving forward, NIO are predicting, I think, to do about 7,500 deliveries in the next month. So if we can get that, then guys, we will actually soar over that 20,000 barrier to entry for the next quarter, which will be absolutely amazing. So then we will be well on our way to start seeing more progress with NIO and that share price moving forward. So I'm very confident still as a NIO investor, despite the fact that they did miss on their ADS. And I think, you know, that is just something that does happen from time to time. They are still expanding. They are putting a lot of their money into their research and development, moving forward into the autonomous driving sector. So that is something that you guys need to be aware of. You just have to remember that they are slowly improving. Again, it just takes time, guys. So just have patience, have conviction. If you are a bit defeated because perhaps you got in at the highs of $66 and you know you are seeing a lot of red in your portfolio right now by holding NIO because you are down maybe 15-20%, again, I wouldn't panic and sell those shares. The lowest I think that we are going to dip is probably to about 40. So again, I will get to the charts in just a second. So the delivery numbers for January and February, guys, we did have 7,225 vehicles in January, as you guys know, and in February we actually had 5,578 deliveries. So that is why, again, like I said, with the Chinese New Year, we are going to see a pullback. And again, this was representing a 352% gain over the year from the last 2019 fiscal year. And guys, let's not forget that NIO are actually sitting on 6.5 billion in cash, because again, they have been diluting those shares. So they do have a lot of capital that they can actually use to help them move forward. So that is just some of the things I wanted to talk over in this video. Again, my price prediction for NIO will still remain in the triple digits by the end of this year. I think Wall Street are sleeping on this. There is still a lot of fear of the delisting of Chinese stocks. And again, that is always going to make those Chinese stocks very, very volatile. So if you did find value at any point, then please hit that like button and please hit that subscribe button if you did make it this far. Now I'm going to go over the charts and we are going to talk through some of those support and resistance lines, so I can tell you guys what I'm doing with those shares and also where I see the price of NIO going in the future. So right now, you guys can see up on my screen, if I actually price in a layer of support, that we do actually have a nice layer of support sitting around that $39 to $42 range, as I am now drawing up on the screen. We did have highs of about $66. So again, it is just about waiting for that next month. So we have some more catalysts moving forward where we start to see that ramp up of production once again. And I would rather have NIO expanding, not being profitable right now, because in the long run, when they do become profitable, then we are going to see those explosive moves, and then we're not going to see those giant sellouts. So again, it's just about making sure you're patient, buying in on those dips so get a nice average price down. And again, guys, if you are sitting up quite high and you haven't built up your full position, then seeing these dips below in the low 40s right now is a really, really good opportunity to get this stock, you know, while it is essentially sitting at a 25% discount from its all-time highs of $66. Because in a few months time, guys, in 6 months time, you guys are all going to be saying, oh my god, I wish I bought NIO, because it's going to be well up around that $75 range. We do have price targets and analysts that have come out again, and we've got triple digit price targets. We've got Morgan Stanley got $75 price target on NIO by the end of the year. And guys, this is just going to increase as we start to see that ramp up, as we see that global expansion into Europe. Europe and potentially into the US. So right now, as I'm making this video, we are sitting at $47. I think, like I said, that base is not going to bounce below that $40 mark. There would have to be some really, really bad news in China, I think, in order for that there to go down again, or we have to see a further correction in the markets. And I don't think this is going to happen with stimulus coming this month. So I think what's going to happen now is we are going to see some consolidation for some time. A lot of those earnings yesterday were priced in, which is why we did actually see a push up of about 10% in the day. And again, we had actually had a fallback at the end of the day when those earnings did come out, because they weren't expecting to have minus 16 cents per earnings negative. So guys, I think moving forward, if we can break this area of 50 and we can hold up anywhere around that $50 to that $55 range, and we break through that layer of resistance and we actually close on a candle right here in the green, if I draw it in right now for you above this line, then guys, that is where we are going to start to see a new layer of support for NIO. And I think that 50 will then become the floor. And again, it is then about waiting patiently till we actually retest those highs and we start to go up to about that $65 range again. So it's just about remaining patient. Obviously, have your long-term thinking cap on. I'm not selling any stocks. If we do have a further breakdown below 40, I'm going to see that as a buying opportunity. I'll probably be selling some of my other stocks to get more shares of NIO, because I'm extremely bullish on this company moving forward. I think that NIO does offer a fantastic return in the next 2 or 3 years, and I think I could easily triple my money from the current share price. So guys, that is what I'm doing with NIO. I hope you did enjoy this video. Again, if you did make it this far, I just want to say thank you. My name is Jason. Hit that big red subscribe button and hit that big like button below. I make videos on the stock market every day. I hope to see you back on my channel for some more content on investing soon. Take care, stay safe in the markets, peace.